Our stock in focus today is Evergreen Fibreboard. Hong Leong Investment Bank Research said despite fourth quarter results coming in subpar, Evergreen's subsequent quarters are expected to improve. It upgraded the stock to buy from hold with a higher target price of 42 cents from 36 cents previously. That's 35% higher than Evergreen's last close of 31 cents. Some key highlights from HLIB's note. So according to the research house, the group's revenue is recovering from its bottom in the first quarter, with the fourth quarter of 23 registering the third consecutive quarter of revenue improvement. This indicates that demand is gradually recovering. The research house anticipates a stronger first quarter performance quarter on quarter, though Evergreen's ready-to-assemble or RTA sales could see a sequential decline as some buyers withhold their purchase to wait for the major furniture fairs in March. Come the second half, HLIB expects a meaningful turnaround due to two reasons. The first is mainly the new capacity in Indonesia medium-density fiberboard or MDF line, which is expected to come online in the third quarter. The second is the recovery in furniture demand from the US and EU. Now, should central banks start to cut rates in the second half of the year, this will augur well for housing sales and consequently furniture demand. Meantime, the group has made encouraging headways in its diversified RTA exports. Exports to Japan now make up 20% of its RTA sales versus a low base previously when the group focused more on the US market. In addition, the group's successful penetration into the Japanese market could potentially pave the way for it to expand its client base as well as product offerings to include panel board exports to Japan in the future. Quick look now at consensus. According to Bloomberg data, HLIB is the only one covering the stock. To recap, that's one buy, average target price 42 cents. The stock ended trading yesterday at 31 cents, which implies a potential return of 35%.